Hello everyone, this is Triumph Trust FX channel. A warm welcome to you if you are joining us for the first time, and I will encourage you to click on the subscribe button and tap on the notification bell to be notified anytime we upload a new video, right? And those of you who have always been with us, I thank you so much for your support so far. Right, today we are looking at a very important strategy for volatility indices, and the indicator, the only indicator we are using is a supply and demand zone indicator. Although we are going to be at a point, we are going to be using the Fibonacci retracement tool as well, right? So this strategy is highly profitable if you are patient with it. Now we are trading from the 4-hour time frame. Let us look at the indicator. So if you want this indicator, you can join my free Telegram group. The link is on the description of the video below. Then there you will see this indicator, narrow FX MT5 supply demand, or just MT5 supply demand in the group. Then you can get it from the file section. So these are the settings. When you come to common, check this box, then go to input, then you follow the settings if you are going to be adding it manually. So those are the settings. Then if you are not going to be adding it manually, you can also see, you are also going to see this VIX, S and D, this volatility, supply and demand, TTFX. This is the name of the template for this strategy. Alright, so let's get started. Now we are trading from the 4-hour time frame. We are trading the retest of the supply and demand zone. So this zone was formed here, and this retest will look for our entry, but will drop down to 15 minutes time frame. On this retest we look for our entry, but will drop down to 15 minutes time frame. This zone was created there. On this retest we'll look for our entry on the 15 minutes time frame. On this retest, at every retest we'll look for our entry on the 15 minutes time frame. So this is volatility 10 index for our time frame. Right, okay, so let's look at this zone. This is the recent zone we have. So I'm going to mark this zone before we drop down to 15 minutes time frame. So this zone was created and it was retested several times. So now we are dropping to 15 minutes time frame. On the 15 minutes time frame, yeah, so this is where we have the retest. So we are looking for, when price enters the zone, we are looking for where price will pull back a little bit, then push up to take out the liquidity, or take out that high, take out a high and push down to break market structure. Similar, something like this. This one didn't get to the zone, so let me use the one that get to the zone. Look at this, price is in the zone, pulled back, pulled up to take out this high, but we want a single candle to take out the high, or wicks, a single candle. But this one, if you look at this point, you see that it is more than one candle. So this is 1-2 candles, so we don't want this. We want a single candle that will take out the high. Then when that happens, we wait for breaking market structure and a retest of that immediately. Alright, so let's go. Let me look for a better example. Okay, look at this point. So price is in the zone, and we saw that price was moving, consolidating at this point, and we saw this. The price push up, created this high, dropped down and pushed up again, taking out the high. That is the liquidity grab we are looking for. Look at it here. Price took out the high with only one candle, with a weak single candle, and dropped down immediately, breaking market structure. that is just what we're looking for. In the zone, we see price create a high, drop down, and pull up to take out liquidity and immediately reverse, breaking market structure. So when we see this, we are interested, we are now ready to take our entry. So we're going to mark at the last bullish candle before that drop. So the last bullish candle is this. This is the last bullish candle before this drop. That is what we'll mark at. So we can drop down to 1 minute time frame so that we can reduce our stop loss. So one of the beauty is that our stop loss is reduced. So here we can see that this is the last bullish candle before this is the last bullish candle. So we are just this one. This is the last bullish candle before price drop. So we'll mark at that candle. This is 1 minute time frame. Then go back to 15 minutes time frame and adjust accordingly. So we are expecting price to get here. So when price get here, we'll sell. So another way, I mentioned we're going to be using the Fibonacci. So you can also use the Fibonacci. You drag from the high, the liquidity grab, to the low of the impulsive move, right? So this is it. So drag from here to this point. So from here, these two lines where you have 80 is where we take our entry. You can take your entry here, or you wait for this to this place. You wait to take your entry here. So any place, any zone from here, from the line below the 80 line, till you get to 100, you can take your entry. Now let me show us the settings of the Fibonacci. So these are the settings of the Fibonacci, the levels we have. We have level 0, description 0.0, level 1, 100, 0.8, 80, 0.4, 40. Then we have 0.77, 0.77 is what we're using here. So you click OK. The parameters, no, just this. Then you click OK. Those are the settings for the Fibonacci. So we are waiting for price. So this is our target. This is our first target, the 0 level of the Fibonacci. So after you take our entry here, we are looking at our target, the first target here. Then the second target will determine it at the 4-hour time frame, because that is our the zone we got the setup. So this is our 4-hour time frame. So we'll be looking at these equal lows. So our first target is somewhere here, but the second target will be at the equal lows of the 4-hour time frame, where we see the setup. So that is how you take the trade. So with this, you can take one trade in a week will give you huge profits, right? All right, let's look at step index. I saw a set of this, and let's look at this point. So we see that price broke through this demand zone and it became a supply zone. So we see price came back to retest the zone here. So let's see if we have a setup on this step index. All right, this is a 4-hour time frame. We are dropping to 15 minutes time frame. So on the 15 minutes time frame, we see the first time price came here to retest. So we saw price created a low here. Okay, so price came here, created a low, took out liquidity, but it was more than one candle, 2 candles. So that is not acceptable, right? So we also see here there was no liquidity. Okay, let's see. Here it just wicks, and that is more than one candle. So no setup there for us. So let me check volatility 25. This one happened today. I witnessed this one. it happens today. So this is the retest of the 4-hour supply zone on the 4-hour time frame. We also have a retest here for a buy. So let's see if any of them gave a setup. So let's drop down to 15 minutes time frame. You drop down to 15 minutes time frame. So dropping down to 15 minutes time frame, we saw that this is where price retested and price created a low and a liquidity grab, then dropped possibly, but no setup for us until we got this, we saw this. So here price didn't get to the zone here, so this would have been another entry. Can I remove this for our time frame? Okay, so there was no setup there. Let's check for a buy if there was a setup on a buy. So the thing is, we have to you will not see this setup always, not rampant. So for now, even to see a buy setup is not easy. Okay, let's look at this. So price got to the liquidity and the demand zone here, pulled up and dropped down, and what we got here is a price took out liquidity but with more than one candle. Okay, no, it's only one candle. This is a really bearish candle. The second candle is the buy. So we'll see this liquidity grab and price push up to the top. So liquidity grab, only one bearish candle and the other one was a bullish candle. So that is what we want to see. Once you see only one candle taking out liquidity, and the next one we'll see is the reversal. Take note of that, please. Then we saw that price break structure here. Remember, we only allow only one bearish candle in the midst of the bullish candle that's moving up. That is just what we allow. If it is more than one bearish candle in the midst of the bullish candle, we don't, the setup will no longer be valid, right? So after this, we'll mark out the last bearish candle before the upward move, which is this, together with the high, right? Then we can drop down to 5 minutes time frame to reduce our stop loss. This is the last bearish candle of the 5 minutes time frame. We also drop to 1 minute time frame. The last bearish candle in the 1 minute time frame is this. So that is our entry. So we'll go back to 15 minutes time frame. Yes, so this is our entry. So price broke it with just a pin, so you can give a space for your stop loss. Just give a little space for your stop loss so that you not get stuck out in case of a further liquidity grab. So you can use your Fibonacci. So that's our take profit. So price retrace at this point, which is our 80 level, we can take a buy. We took a buy, we took a buy here, price pushed up and came back down with a pin touched. If you put your stop loss here, it would have taken us out, but if you extend it a bit, then price will come, and that is it. Hits at first take profit here and continue. So the second take profit, as I said, is the 4 hour time frame. So this is a level, this where you have these highs, this is where you target for your take profit, and that was how this price moved up to this level, right? So that is the way to trade, the easy way to trade this supply and demand zone on the volatility indexes. If you have any question, please feel free to contact me on Telegram. I will respond to your questions. If you want to join the mentorship group, you can contact me as well. Alright, so I wish you all the best. Take your time to study this strategy, look into it over and over again, don't just jump into trading it. Test it very well. Test it. Don't only back test. You can back test, but you are also required to test this strategy in a live trade to see how it works and some of the adjustments you need to make so that you will not lose your money. All right, thank you for watching and have a wonderful time.